Hello everybody. So today I want to talk about RocketLab, a company that is often recommended to me in the comments section. And I've briefly analyzed it before. This is going to be somewhat of a longer analysis. So the question is RocketLab a good buy right now? Well, first of all, RocketLab, I want to say, is a fairly difficult to understand company if you ask me. But here in a nutshell is a summary of what I view RocketLab as, or how I understand it. The bulk of their business comes from space system, their current business, their revenue, right? Not their valuation. The bunch of their revenue right now comes from things like star trackers, radios, reaction wheels. They have a software separation system. They have great solar panels for satellites. That's the bulk of their revenue. And they also have another major part of the revenue, which is small satellite launch services. And you can see that in 2024, they are projected to really ramp their sales of these new launches of satellites, and they're going to launch many more. One of the reasons why the stock went down is because they had an issue with a launch, and they seem to have fixed the issue. And then lastly, I consider RocketLab to also be what I'm going to call a call option on Neutron. And Neutron is their larger rocket that they're developing to launch a satellite constellation, to launch multiple satellites all at once. It's a bigger rocket that we are developing, right? It's not there yet, but I would argue that the valuation of the stock also includes this call option of Neutron, which is a rocket that is yet to come. And when you do the revenue breakdown, so this is what we get. Quarter-on-quarter revenue increase between Q2 and Q3 was a 9% increase. So if you analyze that, revenue growth grew 41%, which is above my threshold of 30%. So it checks the box right here, which means that, it fits my criteria. Stock I would be interested in. The stock is not a pre-revenue company. They are making money on a gross profit basis, which, as you know, gross profit is what I care the most about. I want to see my companies reinvest below the gross profit line. I want to see them reinvest and put more money into the business. And again, like I said, space systems is the bigger part of the business for them, and it's growing faster than rocket launches too. You can see rocket launches, the launch business here at 22 and 21.3 million is roughly flat quarter over quarter, but space systems went from 39 to 46 million, so that is growing quite a bit. And analysts estimate that next 12-month growth on revenue will be 90%. So I'm going to take analysts' number. I'm not going to take the annualized rate that I get from quarter over quarter between Q3 and Q2 at 9%. I'm going to take analysts' number in my valuation. So let me input these numbers on my preferred metric, which is enterprise value over gross profit over revenue growth, answering the question, how much am I paying for each percentage point of future growth? And what number do I get? I get a 0.32. So this stock is not too expensive. It's in my second quartile, what I'm going to call the second quartile of cheap stocks. So it's definitely not the first quartile, right? It's not the top 25% cheapest, but it's in the top 50%. So it will fit in that second quartile. It's not an expensive company, but keep in mind that number of 0.32, a lot of this rests in the fact that I inputted 90% revenue growth for RocketLab, which I believe it's realistic. They have a small enough base and they have concrete customers, and they have a large backlog. So it is realistic to imagine that, but it's still a steep number of revenue growth for them to reach. Also, a good point for a company like RocketLab is that bankruptcy does not seem to be a concern anytime soon, at least. So if I average their adjusted EBITDA, it's been negative. So proxy for cash flow, the cash flow has been negative. But if I average that as they are losing about 20 million a quarter, right? The cash drain, the cash burn is about 20 million a quarter, and they have 288 million in cash. So 288 divided by 20, that's 14 quarters. That's 3 years till bankruptcy at the current cash burn. 3 years until bankruptcy. So I think they are largely safe from that, given the fact that the revenue is predicted to grow by 90% over the next 12 months. And in my view, this space will only get bigger. But perhaps the better way to analyze RocketLab is not using my conventional methods of looking at revenue growth and looking at how much I'm paying for revenue growth. Perhaps the better way to assess this company is to compare it to, quote unquote, the elephant in the room, which is SpaceX, which is the company to which RocketLab is always going to be compared to. So if you were to look at what we hear privately about SpaceX is a private company, right? Doesn't have any stock. We don't really know exactly the value. But if you look at SpaceX appears to be valued right now privately at 150 billion for the whole company. And the yearly revenue is about 9 billion. By the way, it's noteworthy to say that the revenue for SpaceX is predicted to grow by 70% next year. So this would be close to the 90% that RocketLab is projected to grow because they operate in the same market. They do launch satellites. It's a high growth market, and both companies will benefit. It's reassuring to see 70% projected growth for SpaceX in terms of revenue, 90% for RocketLab. It puts this number into a proper range, a proper context of the main peer in the industry. Interesting, though, is that if you take the 9 billion to the 150 billion private valuation and to take 9 billion revenue, that's a price to sales ratio of 17. Now, if I were to apply that price to sales ratio of 17 to RocketLab's current revenue of 0.236 billion a year, that's the current revenue, and I apply the 17 price to sales, I should get a market cap of 4.02 billion for RocketLab if RocketLab was valued the same as what SpaceX is valued privately. Now we can see market cap is just above $2 billion. So roughly, if you were to compare the valuation on a price to sales basis of RocketLab compared to Tesla, roughly RocketLab is twice as cheap as SpaceX, and I meant SpaceX, by the way, not less Tesla, twice as cheap. Is this fair? I would argue it's probably fair because, of course, RocketLab does not have the aura and does not have the credibility of the older, more established company in the space that is SpaceX. But it's very likely that if you own this stock, you are betting on a restarting of this space age, of this space industry, and a restarting of the quote-unquote hype, which is very real this time. It's not exactly hype when you see the disruption happening, but you're hoping for a positive sentiment around space, and of course, SpaceX is the big name. But people can't buy SpaceX. So what are they going to buy if they can't buy SpaceX in the market? Well, they may be very well interested in RocketLab. Overall, I would argue RocketLab right now, the valuation seems pretty fair to me. Second quartile, cheap, but not extremely cheap, not expensive either. I think this company is trading at a fair price right now. I haven't decided if I'm going to buy or not. The bigger question for me is, do I want to be in the space business, or am I happy with my Google stock that has a 5% ownership of SpaceX? You may know if you own Google owns 5% of SpaceX, so you have a little bit of exposure if you have some stock in Google, and I consider Google one of my savings account stocks, which is why I never report on it. Anyways, very interesting company. I think it's a company where you do have to be an insider and really study it closely if you're going to buy that stock, much more closely than I can ever do it in this video. And obviously, I haven't invested enough time listening to the conference calls. I think you'd do well if you invest in this company to listen to all of our conference calls, listen to the CEO, and listen to what's going on in the field of space in general. Which I already follow too many fields, so that'd be one extra field. I can't follow them all. Anyways, this was not investment advice. This was just entertainment. I hope you were entertained. I appreciate your likes. I appreciate your subscribes. And please follow me on X at BeatTheDenominator. Thank you so much for watching and have a wonderful day.